Welcome back to Teshkid FX for another quant price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the quant chart, which at the time of this recording has continued to hold above a key area of support at around the $124.9 mark. We are also trying to battle out with the 20-day MA here on the 4-hour chart, which is now acting as resistance, and the next key area of resistance that I'm also watching is the area at around the $133.2 mark. We have also continued to obey the Elliot structures, where I still believe that whatever we are seeing is the formation of this wave 2, and that is after seeing this 1-2 setup. And after seeing the 1-2 setup, we started this Elliot structure having that first wave giving us a peak at around the $165.5 mark, and whatever we are seeing at the moment is a retracement in the formation of this wave 2. And before I get further into the technical analysis and also give you my breakdown targets here on the quant chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership, and allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that Quant, after seeing the all-time high, we started the bear market where we had been seeing lower prices in this ABC corrective structure in a move that gave us a bear market low at around the $40.1 mark. Then we started this massive bounce to the upside, obeying the Elliot structures, where you can see that I have this Elliot structure in blue, having the wave 5 giving us a peak at around the $229 mark, and also completing the formation of a larger Elliot wave count 1 to the upside. And after seeing the formation of a larger Elliot wave count 1, whatever we expected next is a corrective structure in the formation of that wave 2, which we have seen over here giving us a low at around the $94.4 mark. And after seeing the low for that second wave, whatever we expect here on the long-term scenarios is the start of this massive bounce to the upside in the formation of this wave 3, and sketching out a minimum target area to the upside in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $402.6 mark, and that is the minimum that we can expect that higher Elliot wave count 3 to the upside to do. And in the formation of that wave 3, we also expect to see fractal waves in formation because of the impulsive nature in the formation of that wave 3. And over here, after making our low in the formation of that wave 2, we saw this 1-2 setup, and after seeing the 1-2 setup, we started this Elliot structure having that as the first wave, giving us a peak at around the $165.5 mark. And whatever we are seeing at the moment is a corrective structure in the formation of this wave 2, and using the Fibonacci's to get a minimum retracement area in the formation of this wave 2 by connecting the Fibonacci's from the low of the first wave to the high of that wave 1. That gave me a minimum retracement area in the formation of that wave 2 between the fib level 0.5 and the fib level 0.618. And yesterday, after losing our key area of support at around the $124.9 mark in a move that gave us a low at around the $124.4 mark, that will make me to extend my target area in the formation of this wave 2 back to the fib level 0.78, which lies at around the $115.4 mark. So my target area in the formation of this wave 2 now lies between the $133.5 mark and the $115.4 mark, and it is within this red target area that I'm expecting to see the low for this second wave to the lower side. And we can say that there are chances of having seen the low for this wave 2 because we have managed to get into the minimum retracement area, and there are chances that we have made the low in the formation of that wave 2 at around the $124.4 mark. And if that is the case, then I'm expecting an explosive move to the upside in the formation of these wave 3 that we expect after seeing the formation of these larger Elliot wave count 2. And for that move to also play out, I'm expecting to see a break above the 20-day MA here on the 4-hour chart, so that we can have the support that we need to continue gearing up, and also see a break above the $133.2 mark, which is also acting as resistance. And in case such a move plays out, then we can expect a retest, and once the retest is a success, continue gearing up and also continue breaking through other key areas of resistances, and also see a high that is above the high at around the $165.5 mark in the formation of these higher Elliot wave count 1. In case such a move plays out, then that will be enough confirmation that we are back in the formation of these higher Elliot wave count 3. And if that is the case, we can also sketch out a minimum target area in the formation of that wave 3 by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1. then dragging the fibs to the low of the second wave, and that gives me a minimum target area in the formation of that wave 3 at the fib level 1.618, and that is at around the $226.6 mark, and that is the minimum that we can expect that wave 3 to the upside to do. But we also need to be prepared for a worst case scenario in case we continue holding below the 20-day MA and also lose our key area of support at around the $124.9 mark once more. In case such a move plays out, then there are chances of fully maximizing this target area by giving us a low between the fib level 0.5 and the fib level 0.78, and that is a maximum of the area at around the $115.9 mark. So there are chances in case we lose the key area of support at around the 124.9, maybe see even a retest of that key area of support, there are chances of fully maximizing this target area and also give us the low for that wave 2. And in case such a move plays out, then I think that would be another perfect entry to get back into Quant, so that we can be able to ride that massive bounce to the upside in the formation of that wave 3, and also be able to sketch out new target areas in the formation of that wave 3. So that is what I'm expecting in case the breakdown continues. But in case we continue gearing up, see a break above the 20-day MA and also above the key area of resistance at around the $133.2 mark, then there are chances of continuing to unlock even higher prices in the formation of that wave 3 that we expect after seeing the formation of this wave 2. So let's be patient. And also taking a look at the indicators on the RSI, we are trading at around the 40 mark, meaning we have massive room for us to fully support both scenarios. And also taking a look at the MACD, we have been able to print a bearish cross, and we are seeing a bit of a sharp decrease in the selling momentum here on the MACD, meaning soon we might be able to print that bullish cross to fully support higher prices in a move that could be giving us the formation of this wave 3. So let's be patient and see how that plays out, and I'll be keeping you updated.